The issue here is what's the impact of the rates cap. The point I mentioned before, the data are still coming in. And I think even yourselves and others have been looking at it. You've been writing articles about this issue. The president mentioned it in his recent State of the Union address. My point is that there is data that is coming out. Now, we, on the other hand, do not use we have a certain way of doing business, a certain way of, let's say, surveys. We have a very, let's say, regimental approach or very structured approach in terms of our surveys. So I don't think we are getting the same data, but the data are collaborating. I guess that's the point you're saying. So the data is aligned in that sense. I think it is important for us to understand. We are not in a business of just knee-jerk reaction. We were quite explicit about the problems at the beginning. You remember we even wrote an op-ed piece that actually explained the CBK's views and concerns. And those still remain on the table. The issue now isn't so much what are the prospects, it's what has happened. And I think this is where it is important for people to appreciate the damage, the potential damage. I guess I would only say that I've made the point that when the president signed this bill into law, he did make the point. If you look at the last paragraph of his press statement, he did say that this is a temporary thing. He didn't use those words. It said that we still are committed to a free determination of interest rates. It is important to stress that we on the central bank side have not been sitting idle. There are many things that we've been doing, many reforms that we are doing to ensure that the fundamental problem with the interest rate, with what led to the interest rate caps, does not recur. So think of it differently. What would happen if interest rate caps were lifted today? Would we go back to where we were a year ago? That would be atrocious. So I think the point here is the other reforms that we are ushering in that will actually ensure that the banks actually are doing the right thing. Remember my words to them at the beginning was they need to make a deposit. What did they call it? Down payment. Yeah, they needed to make a down payment. Those were my words to them. They never did. So they need to change. And one of the items is the business models that Martin talked about. They need to change to have a much more sustainable business model that does not involve charging everybody an arm and a leg. And if they then correctly stick to that way of doing business, then they won't charge us interest rates that are completely unsustainable, or even the way they do business, meaning when you have a problem with a loan. Do they just come and grab your security and walk away with it and sell it? There are all these horrendous stories that I'm sure you've written about, you've seen people that are involved, and maybe you yourself have been involved in this sort of thing. So I think it's more that than anything else. If you look at the press release, the last paragraph talks about this particular issue as well. It talks about how monetary policy has been blunted by the interest rate caps. Actually, one more point I should have said is looking at the distribution of loans, they are actually all clustered around 14%, right? So what does that mean? It means, think of what would happen if the MPC decided to lower rates. So then, let's say they lower rates to what? 8%, let's say? Just as an experiment, right? A thought experiment. So then the cap will move from 14 to 12, right? What's going to happen to all those people that were getting loans around 14%? They'll be too risky in the new regime.